Jason Watson, Watson CPA Group. Happy Friday to you, at least to myself. It's Friday for me. Today we're going to discuss health insurance and how that affects S corporations, and specifically how that affects you as a shareholder in your compensation. Okay. Quickly, when you're a greater than 2% shareholder, you have special rules. Okay. And one of those rules is that health insurance paid by the company becomes compensation. Let me take a little bit of a sidebar and explain that when you have health insurance expenses, that should be paid from the business. Okay, a lot of folks will pay them individually and then have the company maybe do some sort of reimbursement. It's unnecessary. It's best to have those premiums paid for directly by the business. I know some states and some insurance companies don't allow for that. That's fine. Then you can pay for them individually and have the company reimburse you. But if you can set it up with ACH or something else to have that drawn directly from the business checking account, that's ideal. So when we talk about health insurance, we're saying medical, dental, and vision. All three of those are considered compensation to you as a shareholder if the company pays for them. Okay, here's an example, and we'll just kind of run through this. Let's say you've determined that your reasonable compensation, your reasonable shareholder compensation, reasonable shareholder salary, whatever you want to call that, is $50,000. You use RC reports, you use BLS.gov, salary.com, you picked a number out of the air, whatever, it doesn't matter. We have $50,000 here in our example. That's what the IRS would tell you is your reasonable compensation should you make the argument. However, you have health insurance premiums of $10,000, okay? And we just got done saying that when you're a greater than 2% shareholder, you have these special rules, and if the company pays for those premiums, that is considered compensation, okay? So this $10,000 is actually factored into the $50,000. So if we deduct the $10,000 from the $50,000, we get $40,000. That is now the salary that is needed to add to the $10,000 to come up with the reasonable compensation of $50,000. Okay, so if we look at a W-2 really fast, we're going to add the premiums, the $10,000, to box 1, because that's wages, that's compensation. However, this is the huge thing here. However, we don't add it to box 3 and 5. Box 3 is the wages that are subjected to Social Security taxes, and box 5 are the wages that are subjected to Medicare taxes. So instantly you can see that you needed to have yourself be at a $50,000 compensation level, but because of health insurance premiums, you're really only subjecting $40,000 to Social Security and Medicare tax. And that's what an S corporation truly does, is reduce the amount of taxes paid to Social Security and to Medicare by paying yourself a salary, and now we're also lowering that salary by the amount of health insurance. So this $10,000 in reduction saves you 15.3%, which is basically Social Security and Medicare taxes, or $1,530. So this $10,000 is really costing you about $8,500. That's pretty cool, right? So this is how your W-2 would look, okay? So now you're thinking, well, hey, this is a kind of a crummy deal. You know, I'm gonna have to pick up income on this $10,000. Well, you do and you don't. On line 7 of the S corporation return, Form 1120S, it'll show $50,000. And line 7 is officer compensation, okay, if you're to dig up your tax return for your S corporation. On Form 1040, which is your individual tax return, also on line 7, will show $50,000 because that's what your W-2 box 1 reads. However, there's a deduction for self-employed health insurance of $10,000. So truly what's going to happen is your adjusted gross income will be $40,000. So even though you got paid $50,000 according to your W-2, it's really going to show up as $40,000 as adjusted gross income. So this is what we call an in and out. The income comes in and it goes right back out as a deduction for AGI, for adjusted gross income, and that is going to compute to be $40,000 in this example. Okay, so you can see how you can leverage your health insurance premiums to reduce the amount of salary. You still have reasonable comp at 50, but you're lowering your salary and all the costs associated with salary, unemployment, Social Security, Medicare, all that stuff gets reduced by the amount of the premiums. We see a lot of business owners who run their own payroll, either through Gusto, Intuit, what have you, and they mess this up. They don't understand that they're supposed to do this, and they don't understand the benefit of doing this. If you don't do your W-2 this way, you can still deduct the health insurance premiums, but now they're going to be on Schedule A, subjected to all the crummy limitations that Schedule A does on your 1040 for health insurance costs. So anyway, this is how you're supposed to handle the health insurance premiums when you're a greater than 2% shareholder of an S corporation, and this is how handling it correctly can save you some pretty decent money. My name is Jason Watson with the Watson CPA Group. I invite you to give us a call, send us an email. We would love to chat about this and walk through it with you, and you can also check us out on the internet. Again, Jason Watson, Watson CPA Group. Thank you.